Murthy, go ahead.
Can you see the screen?
தெரியுது மச்சி.
Okay. So, uh,
அது மேக்ஸிமைஸ் பண்ண முடியுமா தான் இதை? அது ஃபுல் விண்டோ அதெல்லாம் பண்ண முடியுமா? ஸ்லைட் ஷோ மாதிரி பண்ணால் கொஞ்சம் பெருசாகுமா? இல்லை வராது. ஏன்னா என் வியூ மாற்றணுமா பார்க்குறேங்க.
இல்ல அது பிரசன்டேஷன் மோட். கிளிக் ஆன் தட்.
ஸ்பீக்கர் வியூ போட்டுமா?
வரலையா?
இது வர ஸ்பீக்கர் வியூ போடு.
Now it's okay. Yeah.
Okay da. So basically now I do only the breakout trading. And then now in the last 15 years I tried a lot of different strategies. Okay. I tried breakout trading, I tried pullback and style drift and sometimes I did only fundamental investing and owning strategies, you know. But I was always searching for a holy grail system. ஒரு 10 வருஷம் பண்ணிருப்பேன் இந்த மாதிரி ட்ரேடிங் until I really started becoming consistent and profitable. Plus, I tell you, probably last 3 years is when I really got consistent. Until then, I used to have like a boom. There was a stage where I lost a lot of money. Then there is a stage where I became like a boom and bust trader, you know. I make a lot of money, then I lose a lot of money. Really, there was no consistent growth. So I would say probably in the last 3 years is when after COVID, even after COVID year, I made money. Then the following year, I didn't. Then 22, 23, 24, that's when I really have, irrespective of the market conditions, profitability, you know, the last 3 years. Basically, I cut down all the noise and I started focusing on very few strategies. And I just started looking at only breakout trade. இது வந்து எனக்கு so even though I know breakout trading, I used to have a lot of setups. Like in breakout trading, if you know understand the chart patterns, you can do the flags, you can do triangles, you can do cup and handles and channels. There is really not one is better than other. It is up to you which one you want to master. So for my style, I think this continuation setup and consolidation setups are, suited best for me. And actually, this guy is, I know this guy for a while, actually, probably for, I've been watching his videos, but not really got into his strategies much till the past couple of years. Then took a membership to his site, actually. And he has like a plenty of guides to understand the systems. So this is his main setup. Actually, it does continuation, consolidation. He also does reversal, breakout, and all. But I focus only on continuation, consolidation, and I deep dive. I'm still working on these setups. Okay, I'm still learning more and more. Every time I go back and look at some of the failures I had, and every time I take a trade, I make some notes, but I don't have a proper journal. But what I'm really working towards now is low risk, high reward, even in these setups. I'm trying to risk as little as possible and trying to make more. And also I do long term investments. Basically, this is a short term trading. Both setups I use for short term trading. Okay, continuation setup and consolidation setups. And then for long-term setups, I use option leaves. And I'll go through this and tell you why I do options instead of the stock. Okay. Let's dive into these setups. And probably we don't want to make it as a charts class, but probably you guys know some of these patterns. Basically, it's like a visualization memory. These are the kind of patterns I look for. As soon as I open the stock, I'm going to the chart list. I'll see if something like this shows up. What I look for is the stock made at least 10% to 15% more recently, and then it consolidates for 2 to 10 days. Anytime, probably I'll enter the trade 3rd day all the way to 10th day, anytime. And I expect for again the range expansion followed with the range compression like this. Then I keep this stock for 2 to 3 days. And these are like a single strategy, I might like 5% or 8%, and probably in a week my account will go up for 1% or 1.5%. I don't pay attention to fundamentals because it could be anything, any stock which has this pattern. For 1 or 2 days, I don't want to deep dive and understand the fundamentals of the stock. It's purely technical trading. And I don't look for volume either. It's a price action. I don't follow any moving averages. I don't find any overbought, oversold, anything. It is a simple strategy. I just follow simple stocks, any stock with this simple pattern. And from all my trading, what I found out is high probability trades will come, continuation setups in the early stages of the breakout, which we call stage 1 and stage 2. I'll show some examples. So basically, as you can see that how linear this, stock moves for like a first 10 to 15%. Then as you can see, the candles becoming tighter and tighter, smaller range. And I look for the narrow range candle because this will be in my watch list. Then as soon as it takes the high, I'll go long with the low of the day as a stop, which will give me a big size of my account. Like I can put 30-40% of my account, and I'll start scaling at the previous size off. Then I'll get to the at the entry I will raise my stop. Recently I posted quite a few trades like Goldman Sachs, Dell, all these things. These are all continuation setups where I took like 2 to 3 days profits. Okay, so
daily chart are
what?
It's a daily chart.
It's a daily chart. You can now. Recently, I started experimenting with hourly charts also.
Okay.
Especially if the stock breaks out like this, I'll show which stocks I do for hourly. Not these one, not these stocks. We'll go for that also. So, and the consolidation setup, right? Consolidation setup is slightly different from continuation setup. Basically, consolidation setup is something which consolidated in the narrow range for like 2 to 3 months, or a big channel, minimum at least it should consolidate for 3 weeks before the range expansion comes. But for this, volume is must at the breakout. And also we look for some catalysts, some earnings, or some some kind of new product or new customer, or a government related funding contracts, or some, in case of biotech stocks, some new drugs, and I focus mainly on $10 billion companies, around 10 billion company, because with a catalyst, with a volume, if 10 billion company break out, it's a lot faster to become $20 billion company than something like a $1 trillion company like Nvidia. If it breaks out, it won't double, right? So these are my my second account. Those continuations are in my first singles account. This is my position account where I keep it anywhere from month to 6 months, and I target for around 20 to 50% profit on these positions. But my continuation setups anywhere from 5 to 10%. I focus because it's only for 2 to 3 days. It's almost like expansion of day trading, not a day trading, but it's like a 2 to 3 days trade. So these two are my main accounts. And when I talk about consolidation setups, probably you guys heard of Dan Zanger. I don't know how many people know about Dan Zanger. He's a guy who started with $17,000 and ran it all the way to 42 million in like 14 months. He has the world record for that. He only look at flat top breakouts with good fundamental stocks. And there is another pattern that comes into is a VCP pattern. It's like an ascending channel pattern. Let me see if I have it right. So as you can see, this is like this is the Mark Minervini pattern. I don't know whether I'm sharing the screen. Oh, you guys see this, right?
Yeah, we are able to see it.
So
yes.
basically, it's a huge run, and then it starts low. It starts creating lower highs and putting pressure on the tops, After testing multiple times, it will break out of that. And this is where Mark Miller, this is like his bread and butter setup. You will try to buy it using moving averages with a very small stop, and he sizes big. And this is one of the patterns. And then other examples are like a cup and handle pattern. This is also very popular William O'Neill pattern, you know. So basically, these are the patterns which I'm talking about. Is like go with fundamentals, catalyst, and volume breakout, where you can stay for 1 month to probably 6 months. Okay. So this is my second account where, like, when I feel like this is going to go based on catalyst and my analysis, if I think it's going to go, then I will add it in the second account. So let's go through some examples, right? I put some examples, combination setups, and these are the 3 types of setups. Okay. Inside that, some setup starts with a consolidation, then can become a continuation setup. And I also have without any consolidation, there will be some trades, and continuation come from gappers. I'll go in one by one. Let's go with the combination setups first. Okay. So combination setup is like basically it consolidated for a long time, like, and there is a huge volume here, as you can see this, and it's a breakout. So this is the day I'll go in. This will go in my first account, I mean second account, where I will buy, like, I'll give a little bigger, stop, like 5 to 8% below the channel. Again, on that day, if it takes the low and come back into the channel, I know it's a failure. It's not, my thesis is wrong, hypothesis. So I will, 1 second. Thank you. Yeah, on which word. Thanks. So, as you can see, this is a consolidation, flat top consolidation breakout where the stock really rallies, right? So this setup, I call this as a combination setup. Every morning, my goal is to find these setups. Which one is breaking out of the range today? Okay. This is what, and every week I'll go through some stocks to see which stocks are consolidating, so that they're going to present a breakout opportunity. Because this will give me an entry in my position account, and also I look for the continuation, 2 to 3 days, day trade kind of thing. So as you can see, it break out and it moved. Now it's consolidated here. You see that how tight consolidation is, and then this is my continuation stage 1. This is a continuation breakout. Basically, it is continuing the trend. So basically, I will enter here on this day, and I'll keep it for a couple of days. And probably this one, I got out a little early here. And then again, it will continue and consolidates for one more time, and it breakout. So this is my main setups I look for, main pattern. Basically, I look for every morning to see which one is consolidation breakout, because I know I'm going to get 2 singles from this also in next 2-3 weeks. Okay. So this will go into my watch list. And this is probably 5 to 10% day trades, but this one stays in my account until I get, see, typically very first time you will see this action when stock goes vertical. You will see 2 days to 3 days where it will provide a big range. Like you'll see exhausting candles, or like a big hanging man. It'll open up and it'll give back everything. Then it'll sell off and you'll see a big hammer. So basically, there is a range set up by buyers and sellers. What's the top? What's the bottom after the initial run? Then it will consolidate in that range, and it will fall, and it will set up the second stage of consolidation breakout. So my focus is consolidation stage 1 and consolidation stage 2, which will happen here. And in between the stages, I'll take 1 or 2 stages. But if it continues and again it sets up stage 3, I will pass, because the odds of working stage 3 continuation breakouts are less. Okay. So these are the high probability setups I look for, as you can see. So this is my position trade, and these are my singles. Now, Costco. Here is another one. You see a huge, consolidation, and it's a breakout. And on this day, I took this trade, and but I did not sell it. I took it for some time. I think pretty much I went all the. This is in my long-term account, right? My position account. I kept it for a couple of months. I went all the way to 700, I think. In between, I also have in my day trade account. I looked for stage 1 and stage 2, trades, singles, where I kept for like 3 to 5 days. This is another example, and then third example is NVIDIA. As you can see, the huge consolidation and breakout, and it'll get into my position account. And I kept it for a couple of months in my position account. In the same time, in my singles account, I look for a couple of single trades. And I don't do the third trade, because this is how I improved my process. The more I over trade, I kept giving the profits, because at later stages, continuation is very difficult. It has to, again, form the consolidation. And once it forms the second consolidation, I will do again the same trades. But even when the consolidation happens third time, that is also a little bit of less odds, So I'll just look at the high probability part of the technical trading, only looking at the first stage in consolidation, second stage in consolidation, first stage in continuation, and second stage in continuation. Okay. Then this is a GPS. As you can see, the consolidation breakout I bought, and then I also bought a continuation. But this is kind of like once I took it profits in continuation, singles account right here, but this one also I exited here. I did not catch this one. I exited somewhere here because I kept seeing it's going every single day. Here is the thing: when you see some of the stocks, if they keep going every single day, probably buyers will exhaust fast, and it will go into the set. I don't want any. Here it's a stage 2. Actually, I'm looking for the above that high for the stage 2 single, but I passed because I did not have faith in that. These things I learned from experience, but nothing wrong in taking. But I would have taken a small loss had I taken that. But luckily I did not. Right now it's again setting up. But it's a huge pullback, so I expect it to base again and set up some kind of channel. Okay. So, do you understand this combination setup, which is my primary, primary go-to trading strategy in my both accounts? For consolidation, I'll keep 5 to 8% stop. For continuation, I put probably 2 to 3%, not more than that. Anybody has a questions on this? என்னடா பண்றீங்க இருக்கீங்களா?
இல்லடா, இல்ல கேக்குதா பேசுறது?
கேக்குது.
ஒன்னும் இல்லடா, இது so you put a lot of effort to find this kind of setup and stocks.
Yes.
So is there a kind of a stock screener will give, like, based on the momentum, will it give symbols for you, or you have to go through the painstaking process of finding this?
It's a mix of both. I have some scans. Because I keep watching every day, right? I will find this pattern. So I will tell you my process briefly. I will show that also what I do.
Sure.
So these are like
Murthy, that $10 million thing that you said, that's the market cap, right?
10 billion, yes. Right. Okay. Because this time NVIDIA is not really a $1 trillion company. It's around 300-400 billion. Still big. That's why I did not leave it long term, But if you see SMCI, it started with like 30-40 billions. But anything below 100 billions, you can go for it, because there will be a lot of buying, right? As you can see, I need this volume though in a breakout. But on continuation, if you see, I don't care much about volume. It just keep pushing the pricing. Pricing power keep on, because there are all incremental buyers, Every morning the funds will come, add more, because it's in the young setup now.
And any chance that the same stock could you could have it in multiple accounts of yours?
Yes, that's what I said, right? This consolidation might have one account, which is a position trading account, where I keep it from 1 month to 6 months. Okay, that is this is the day I will enter that trade. Okay.
Mhm.
And then once it moves like 10 to 15% and consolidates, compresses the range, then I'll do in my swing trading account, which is a singles. I'll only keep 2 to 3 days trades in this account. You see? So this one gives trades in my both accounts. One in my short term, one in my intermediate term account, which is like 1 to 3 months or 6 months, where these are the setups I find. But it is hard to find these setups.
Yeah.
Okay. But these are very possible. So these are all will come in my singles account. It's a day trading kind of account. 1 to 3 days I'll put it. Is that clear? Actually, I don't know whether I confused you guys. I have 2 accounts.
So
I have
one
third
வந்து
account also.
sorry Murthy. So
Yeah.
ரெண்டு அக்கௌண்ட் சொல்ற ஒன்னு வந்து it is a regular account or is a 401 retirement account or both retirement account for you. So எது கேக்குறேன்னா நம்ம ரெகுலர் அக்கௌண்ட் யூஸ் பண்ணும்போது end of the day tax file பண்ணும்போது we have to go through the meticulous process of
Yes.
finding all those things.
I don't mind paying taxes. Yeah, it's like I'll pay taxes, right?
Okay.
I do have a retirement account, but I'll talk about
Okay.
retirement account. I use options. This
Okay.
account is both are my taxable accounts.
Okay. Fine.
This is a consolidation breakout account, which is like a position trading account. That's what I call. Where wherever I see this consolidation, I'll go for it.
So consolidation account வந்து you will keep it for longer time, like maybe it's 6 months,
Yes,
3 months.
1 to 6 months, I would say, more than a month. But
Okay.
anything like less than a week, I'll do it in my day trading account. That's it.
Okay.
But both trades are generated from the same setup, actually.
Same. Okay. புரியுது.
You understand? So because these are like high probability setups for me, especially when it's come out of consolidation. Okay. So I'll always hunt for these stocks. I'll show you what I do. And I just posted some examples here. Okay.
Nice.
Now, this is Meta, right? Now, you see, this did not come up with consolidation, actually. It's like selling off. If you see Meta, it's sold off like crazy, right? And suddenly it reversed in November of 22, I think, or 22. Then it rallied for 10 to 15%. Okay. Here, there is no consolidation. As you can see, it's going like sideways and range is compressing. And I straight away did in my day trading account, but it's not in my position trading account, this one. You understand? How I did not take in the second account, but I only took it in singles account because this rally is not coming from consolidation. So I don't know whether it will sustain or it will go down again. Got it? So, but after that, I took it like a couple of days, two trades I did. Then it started consolidating. Okay. And it's again consolidating. It's a minor consolidation, not a big one. Okay. I don't take a bigger size. I take probably 10% size of my account, but stocks like SMC, I'll take 25%, 30% of my size, account. Big size, I'll go big size, that one. Because the consolidation is smaller, I'll take a smaller size. I'll take like probably for a week. Even in that, I got a couple of, day trades. You see that?
Yep.
3 days trade, 2 days trade. See, here I said stage 1, but again, here I said stage 1, right? This is a continuation from this rally, right? After that, once the stock consolidates for more than 10 days, this continuation setups will start again for me. Okay. Always, irrespective of how many stages, how many continuation trades I take, whenever there is a consolidation, I'll consider that again, that is a fresh stock for me. Okay. It's consolidating, then I can take a fresh day trade again here and day trade 2 here. Okay. And this one, I exited on this day, but then I think it's an earnings. It's a huge gap of earnings. Okay. Then again, it's set up like small minor cup and handle pattern here. It's breakout. Then again, I have day trades, couple of day trades. So I always look for day trades, and I need a prior rally for 10 to 15% in the stock in the past month or so. Got it? And it is resting now, and it will burst again. This is called momentum burst from this Pradeep guy. And he has plenty of examples actually. So,
Murthy,
yeah, so
because these are high probability, you go in for options, right?
no, I don't. I still do options.
Equity.
The way I go options is, I'll tell you when I come to options, right? I look
Okay.
for some. I don't want risk in the stock. Like, let us say if I'm buying Meta,
Mm-hmm.
the stock is like around $400. Let's say if I have a 100K account, even if I buy 100 shares, it's like 40K I have to invest, right?
Right.
And
Right.
Meta won't become 800. Meta might go
Correct.
430, 440, right? And it will
Right.
also take a couple of months. So you are locking your 40, 50K capital off the capital in one
Got it.
trade,
Got
and
it. Got it.
which will give good return, decent return. But I got better setups, you know.
Got
Then I will go for an options in Meta, right? Because I'll just buy call spread or calls and leave it there. Um, so that I don't want to put a lot of capital in that, and I still get the same returns. Got it?
it. Yep. Makes
So this
sense,
is
boss.
right. And here is the Chipotle. Okay, as you can see, Chipotle did not have any base. Suddenly there is a huge same store sale news. I remember. Then it rallied, and I know I can make a case to take here, but if you are running through the chart that day, it doesn't look like it's like you're expecting it to pull back like this. You know, if you do, if you are going through every day and you stop at this day, I know it looks like 3 to 5 days a good trade, but on that day it looked like it's going to come down. You know, because it ran like 1, 2, 3, 4, 5, 6, 7 days in a row. Correct. I didn't take that trade, but it went up. Then I like it here. It went 4 or 5 days sideways, and here is my stage one continuation, 3 days setup. And this trades does not give you 5 to 10% because these are big dollar stocks, right? So I size them up like I take like probably 50% of my account and I'll keep it in 3 days, which will I'll get me like $50, $60. You know, I look at the number of dollars I make on this rather than the percentage. And here are the second stage I got it, and the same thing. This did not trade as well as I know this did work, but I was impatient and I got out here. I think I did not take profit this because I don't want to keep like 50% of my account in Chipotle where it is going sideways. I felt like maybe it has run, probably it's going to roll down or something. You know, it is easy to look once the run is over, but on that day, when you are at this day, you think like it's going to fall again. You're going to get stopped out. You know,
Yeah.
emotions come into play, and then it's a good consolidation. And again, this one I bought in my position account, and I gave the low of the day. It's around 7% stop, I think, and I did a good trade. I think, but I did not take profits here. I was hoping it'll go further, but somewhere here I exited. Then it gave me a day trade again because this is even though this is stage 1 and 2, I'll stop day trading on this continuation trading, but because it's again set up consolidation right now. I went through and again it reset and again gave me a couple of day trades here. Now, this is on Thursday breakout just now, and I added again in my consolidated, long-term account. I mean, my position trading account, and yeah, I still have some like 10% of the account. So I'm expecting something like this next couple of weeks, so that I can take my day trades in this. Okay. And this is a square. See, so basically what I'm saying is the stage 1, stage 2 of my day trades or continuation trades will come from either consolidation breakout or a big reversal patterns. Here you see that a huge volume reversal in a square. It really went up like 40%, I think. Then I took this day trade here, and this one I kept for a few days, and this one I did well. I took it somewhere here, 1, 2, 3, 4, fifth day. I think I took it because I didn't see. I was thinking like I can catch again because I don't want to keep more than 3 to 5 days, because stocks like this can have a candle like this here suddenly. Will give back everything. And then I also took stage 2 trade in this, and that's it. I know it's set up again here, but I just pass. I don't really go to the stage 3 in the same, because the odds of success will go down. So I look at very high probability setups. Okay. And here's the Netflix, same thing, huge gap up reversal on a catalyst. And it went up like 10-15%. Then I took my trade, and I did not like it was setting up here, but I did not see any breakout here, so I did not do beyond that, and it did run well, but these stocks are like large gaps. It'll take a long time. That's why I prefer $10 billion stocks, which move a lot, um, these are also singles. This will also, this is not my A plus setup, but I still do it in my day trading account. And same thing with the MasterCard. So basically, my early morning routine, weekly routine is to see which stocks moving 10 to 15% past 1 week. Which stock moved 20% past 1 week. And I'll see if there is anything I can add it in my trade list. As this one I took. And these stocks move slowly. These are not good for probably when we are seeing that means I'm not finding any setups, that's when I'll go for setups like this. And same thing with Royal Caribbean. It is in a downtrend, boom, it reversed. A lot of people, see, most of the people lose money, including me, is when they like stock. Every reversal, they think it's a reversal and they'll buy it. And only to see it dips again. So I just wait for a good solid rally from the base, 10 to 15%. And then I want a sideways. And I may not, from here, I can make a lot of money. But to catch this, I tell you what, you got to have a huge research desk in a hedge fund to find out how this is going to turn around. And we don't have that. So I just go with it.
There's always failure in that phase,
Right. So I always just take my small, singles. And this is another one successful trade I have. And Uber, same thing. It went down. I cut down here, but if you see, this chart came from a long downtrend and a huge reversal. And I think I did not trade Uber better, but here I would have taken consolidation. I didn't pay attention because our mental capital can't chase every stock. But this is one of the good trades. Uber is also a good, it could have been in my long-term account too. And this is just now happened. UAL. Last week they reported earnings. It's in a sideways range, and it did not have a good base. But if you see the stock, it's in sideways for a long term. And everybody expected United Airlines to, give a bad quarter and all. They're surprised with their revenue. And here is the result. And I jumped somewhere at 15 minutes breakout on that day. And I kept this for 3 days. And this is called continuation from earnings gaps. So this is a third type of setup. The first one is a consolidation followed by continuation. Second one is a reversal followed by continuation. Third one is continuation from earnings gap. As soon as I see earnings gap, I will make my call to see if this is going to have a rally for next 2-3 days, depending upon the quality of earnings. Like when I say quality of earnings is company is expected to miss, but they beat the earnings, positive. And company is expected to have a weaker margins, but they improve their margins. Or things like they got a new management, which is like people have a faith in, proven leaders. And their sales, they're increasing their sales, or they're entering into the new markets. There is something to the business which looks rosy for them for next 6 months to 12 months. And there is a short interest. This is a key. If the stock has a shorts, like 10% or 20%, they will cover with that report for sure, right? This is a high probability setup, but these are like almost a day trades to me, 1 or 2 days maximum. I didn't stay all day. I got out second day itself on Friday. Thursday I got out. And now it is setting up. Now I'll wait. Probably Monday or Tuesday, I'll look for my consolidate continuation setup, stage 1, for 1 to 3 days. Or it can go all the way sideways and set up a base now, But one thing I don't want to do is I don't want to try every day, it's breaking out, it's breaking down. I'll just really want this range to consolidate and compress as small as possible so that my risk reward will be better. Okay.
Murthy,
Yeah,
so you take a position after the earning also, if it is a good earning, if it is
Yes,
breaking out first.
this is my third type of setup, right?
Okay.
But I'm only this is like little bit risky because it's not even breaking out. See, if you see the first two consolidation, these are very solid, right? Nice consolidation. And I love to go long term with confidence. And I know that it'll also give me its next 2 weeks. But if you see these things, this is the good reversal, but I don't want to get into until there is a consolidation. I'm not adding into my second account, right? Now, if you see this third pattern is earnings gaps, right? Continuation on day of earnings, it gave a boom, the good earnings, and it reversed everything. Everybody expected to go down on the report, but it's positive, because look at this volume on the earnings, right? It says clearly funds are. It's not you and me buying, right? This is like big funds buying. They believe UAL is turning it around. So I can't only for 2 days. Now I want to see whether I get my continuation set up in this week. If I don't get any continuation breakout in this, then probably it's going to consolidate for next 2-3 weeks. Got it? Then I'll go into consolidation setup.
Okay.
Now here is another one, Celsius. It has a decent consolidation, okay, but it is in my watch list that day. This is in my watch list for earnings. So every week I'll see which are the good earnings coming up. Celsius is in my list. I want to watch, but I traded badly this one because I bought here, hoping that it will break out for earnings, but it stopped me out straight away. The earnings did not come that day. Then I just let it go. Then I started seeing it's breaking out slowly. It took the range out, but earnings are there. This is like it's all. I also avoid stocks when they're up 3 days in a row. Even in a continuation pattern, if the stock is up like this, even if it is breaking, I don't go for it because the possibility of rest or pullback is high if the stock is already up in 3 days in a row. Okay, and then they gave earnings, and I see it's dropped on earnings. I mean, it's down like 8% or 9%. So then I came back again. I put my trigger here to watching, will it reverse and take the base? This consolidation base. This is after earnings. And it really took out at 10 o'clock in the morning and volume started coming in. Then I jumped over this and I got it a couple of days. I had this trade. And it made me good profit in this one. Then I was looking for a continuation, but it did not. But as you see, it's so much range, so wild. So I did let it go, but it pulled back all the way. Now I know this is very, large pattern. It has to consolidate and it has to shrink again. Okay, so I won't touch it until then. So this is my third type of setups, which I look for. Got it? And here is the lift. Look at this lift earnings. Lyft is also going in sideways, and they think Lyft is not doing good with loss and everything in California, and they gave a fantastic quarter and it's capped up so high. And I chased it actually that day because whenever I buy that day of gap up, I need to make a decision: is it a buyable gap or not? That's the most tricky part. That's where the failure rate of this pattern is so high. It will suck up everybody and then it will drop. But this worked out well and I took my profits. Then I tried somewhere here the lift. I think I also posted in the group. I think probably. And it did nicely break out, but breakout failed. And I think probably I attempted one more time here and it did not clear. So whenever it's forming a channel like this, or whenever it is forming an ascending triangle, I always want to see in the consolidation, it's multiple times it has to, test that highs, so the odds will be higher for the success, but every time if you think it's going to be a breakout, it's going to fail. But we need some catalyst for this to break out with volume. So if you see the consolidation setup, the way I look for is it multiple times it tried the highs, and every time the range is compression. Whenever it touches, it went back all the way down. But as you see, the range is getting narrower and narrower. So the break now next time it touches, there is a high probability it'll break out, but I need a catalyst for that, good catalyst, and I need a volume, big funds. So, you know, if it is coming from here and if it break out, probably I will not take it in my account because look how much run it had, and if it break out here even with a catalyst, I'll wait a little bit to go up and again retest this. Sometimes I'll adjust. Got it?
So you need a consolidation, then breakout. That's what more
Then break out.
like
Consolidation also
probability.
range. I want a narrow range, and I don't want like
Okay.
this kind of a breakout. Yeah, it tested once, twice, and it's breaking out here. Good, it came out. But the point is, I'll take this trade for 1 or 2 days, but I cannot put in my position account because it's already up from here to here, right? I need a consolidation. So this gives me confidence because it's it's a mini consolidation inside this. Okay, so these are the 3 types of setups I mostly do. Okay. And before I go to long-term investing, let me go to my. I'll show you some of the. Let me take. I don't know. This is my TC 2000 chart software. It's loading. So now, cause some of the things I'm watching is like now GM. Okay, they gave a good earnings, and the problem with GM is I don't buy this consolidation though because it's not a young setup. As you can see, GM came from like November to it's already rallied 75%, right? Uh, which I did not buy. Probably this is the better point to buy. But now it gave another good earnings, and again it is testing. But I might take a trade for 2 or a couple of days. But I'm waiting for it to. I don't want to break out here because it's already up 2 days in a row. So I want it like a couple of days. Probably I will see it like it can put small candles, couple more candles here. Then I'll take my continuation breakout. Or if it fills this gap and start again, forming like up and down for a couple of months, then I'll take a consolidation breakout in my bigger account. Okay. I'm just saying this is one of the stocks from last week. And there's another one is Tesla, right? Tesla. Yeah, Tesla, right? Now, Tesla is starting a reversal continuation pattern like the ones I showed you, if you remember, like this kind of patterns. It's coming from it sold off. Now it's coming back, right? So I'm expecting it coming back, but I also have the levels where it is going to. So I'm expecting this is for a day trade next week. It has like a good, it's a good reaction stock for the earnings, the kind of earnings. He is like a snake oil salesman, the guy. He made a very, very good sale. And it's up 24% already in 1, 2, 3, 4, 5 days, right? And it is if it takes this one Monday, it goes above this 170 to 12. I will take for a continuation 2 to 3 days for 180 target, or I want it to be really pull back a little more, for give me more confidence. And when do I take this for consolidation? That's a good question. I really want this, 180, 157 or 180, 170, at least a month or so, right? Or even I like this, all the way to 210. But I'll find some trades, but this is the pattern I like. If it consolidates between 170, 180 after giving me 1 day trade, and then I will target 210, once it breaks 184 for the stage 2, or it can go back again because these stocks now, Tesla will react to market corrections. If Tesla goes to 180, market pull back 5%, I'm sure Tesla will come to 165 again. It trades with market. So I want to see some consolidation here before, I buy it in my long-term account. Not right now. But I know I can have my opinion. I still think it'll go to 130, 120, 120-ish. But I'm not trading it or I'm not shorting based on that. Okay. And here is another one which I really like, Square. You see, You see that flat top coming in this?
Yeah.
See? I'm watching this for quite a while, you know, and if this thing break out, I'm getting in my long-term account 30-40% size, because look at this, it's a $40 billion company. It can easily, and if you see the highs, it's almost like 266. We don't need
Yeah.
266. 90 to 180 in 6 months is possible, you know. As you can see here, when it started the run, right? Look at this. In 2 months, it went up 100%, right? So, and I believe this is a good story, Square. Okay. And what else? These are examples from my work, which I keep in the list and follow. And boy, yeah, this is another monster. And I like Boeing because look at this. Nothing happened. Bad news, good news, bad news, good news. Boom! It started a rally. For
Yes.
1.5 months, it gave you 50%. You know, and again, it sold out. Right? These are um, these are the stocks I use options, and it is setting up a channel. And this is another stock I think has potential to become double once they solve the problems. See, it's so dumb. I know I don't understand probably the business as well as those guys. They got $450 billion backlog. Why can't they expand their manufacturing? You know, I know it's not easy to manufacture planes, but all they need is a news. Even they don't expand. They say that we are starting one more plant in Asia to pick up the backlog. I tell you what, they don't even have to build one plane. In a heartbeat, it will go back to 250. The stock. So let's
Murthy,
look at.
if you know the potential like this, so would you add it to a long term, like 2-year account? But you need
Yes,
to see a base.
yes, correct. That is what I'm going to discuss, right? I haven't
Okay.
talked about. So you understood my two accounts so far: continuation where I do singles, consolidation account where I do 1 to 6 months, right? But all
Okay.
this continuation, I don't care about volume, I don't care about fundamentals. It is just the trend continuation.
Okay.
Consolidation, I need volume, I need a catalyst because I'm going to keep it for a few months. Okay. And I never do consolidation on biotech stocks. Biotech stocks, maybe I do 1 or 2 days because biotech stocks, the pattern is very simple. They come up with a drug, and in the next 2-3 days, they'll come up with secondary offering. You know,
Okay.
so I hate them. I don't want to do that. Okay, so now let's get into the long-term investing. What do I do long-term investing? This is my IRA account, right?
Yeah.
And
Yeah,
in
Murthy,
my
one
IRA,
question.
go ahead.
Quick question. How much is the subscription for TC?
TC, I have around $29 to $30 per month.
Per month, okay.
I had to check that, but it's long term. I haven't checked it. Let me go and do it here. My services. I have $14.99 real time stock data, $8 for the investors feed. Okay, so I spend around $25, but this is
Okay.
not the only thing. And see, this is my daily. I'll come back to that. And that's not the only thing I have. I also have a briefing.com. I also have a market surge, you know,
Okay.
and it's worth it in the end. Instead of following some gurus and paying money, I felt I'm comfortable. So why options? When options, right? I use options only when the stocks are beaten down. And if I have, let's say we have $100,000, right? If I buy, well, great, you did all your research and you did all your hard work and you bought 5% position, $5,000 a year, right? And you sit for a couple of years and it becomes 10,000, correct? But that doesn't excite me at all, right? You did all the work, then you need a big bang for the buck, right? So that's why I use options for that. And I'll show how I use options and how I control it. I'll go through that strategy. And also second type of stocks is the good stocks with the deep pullback, like Home Depot and Costco. If you see, these are bellwether stocks, right? If you see Costco, it really did not fall much though, right? It's around like probably it dropped only 10%. But let's say if it goes to all the way to like 640, another 10%, like I need at least 20% pullback in stocks like this. Now here you go, Home Depot. Home Depot, right? Home Depot down around, you see, around 16%. Now it's going sideways, right? But I want to make sure at least it has a support. This is the only time I see moving averages, to see something is going below moving average, like 250, because there are, even though I don't follow, a lot of funds follow and buy. This is a 50 moving average, it's below 50 moving average, and also if I have another moving average, like let's say it's a 200-day moving average, right? As you can see, it's below 200-day moving average. So most of the good funds, they don't really prefer, but every large cap stock has some kind of an incremental buyer. Home Depot is a dividend stock, remember that. So a lot of dividend funds, Vanguard dividend fund, Fidelity funds, ETFs, all of them will keep on adding these stocks, right? But they add at a good price, where at a 50-day moving average like this or 20-day moving average like that, But I'm not going to wait. I'm not going to follow them immediately, but I want to make sure where exactly the buyers are coming in, where exactly is the long-term level. See, this is the long-term level, 284, right? And this is the breakout from 284, 327. You can see a big channel here for like 3 years. So probably we are coming to a point, as you can see, it reacted exactly at the channel, and you can see how they started supporting here, right? I'll see for a couple of weeks, and I will capture this 20% move back to the highs for next 6 months to 12 months through options, okay? But if I buy 100 shares of Home Depot, that will cost me 33,000 out of my account, and it will give me only probably 6,000 profit. Got it? So
Yeah.
this also I'll go through options.
So
And
options, you just buy the call options, expecting.
Yes, I'll just, yeah, I'm going to explain
Okay,
that.
no problem.
And
Come back.
third one is speculative stocks. Like coin is great, and VKTX is a weight loss drug, which is great. These can go 100% or these can go 0. I have no clue about Bitcoin, right? These are purely speculative for me. So these are the other ones also I try to buy through options. Got it? And everything else with the good fundamentals, good breakouts, large cap liquidity, all I'll go through the stocks. Okay. Now I'll show you how I do this, right? This is my Think or Swim platform, or TD Ameritrade. This is where this is good account for the options. So let's say you buy $5,000 worth of stocks, right? It's around, calculator. I'll go slowly. I'll explain slowly. This is a different concept. $5,000 divided by 167, today's price, right? You can buy around 30 shares, right? And if 30 shares will go 100%, you'll make $5,000. But for that, I have to put how much? 16,700 I have to put, correct? Instead of that, I look for the long term, Jan 26, okay? And I buy, how many people know options actually, before I jump into this? Everybody knows delta, gamma, theta, vega, option.
No, I never looked into those. Yeah, but I know options.
Okay.
Very
All right.
beginner. Yeah.
You know how the options move, right?
Yep.
Basically, let's say if I go here, risk profile, right? Basically, option, let me take a call here, right? Calls and puts, right?
Yeah.
So I'll quickly go through this. Like this is expiring on 17th May. Now the current price is 167.50, right? So 167.50 has option value of $4.65. Okay. That means If you add $4.65, it's around 172. You make profit on May 17th only if it is above 172.
Yeah.
172.50. Everything else you will lose that $465 if it is below that 167.50. Okay.
Mhm.
And how does this option? Currently, this option has a delta of 50. Okay. Basically, what it is saying is for every dollar move in Boeing, this option will move 50 cents. Right.
Okay.
So you start with 465. Right. Now let us say you go to once. Let me see here. I should have delta graph. Okay. Let's see. Right. So as you can see how delta is increasing. Right. Basically 51 cents will the option 465 value here 465 will become 470 when the stock moves to 168. Got
Okay.
it? 168.50. Now when it comes to 168.950, that means for the next one, basically delta is rate of change of the underlying stock. Okay, every dollar move it moves 50 cents. If stock
The
moves
options value.
$2, however delta also moves. So right now delta is 50, but delta move is the rate of change of gamma. So for the first dollar, delta moves only 51 cents. Okay. For the second dollar, delta moves $51.31 plus $3.51. Now for this, so 167 to 168.50, the stock moves 51 cents. From 168.50 to 169.50, the stock moves 55 cents because now gamma is added to it. Understand? So for every dollar, even dollar delta keeps increasing. As you can see, how delta is like at some point. So for every dollar, as you can see at 160, it's 75 delta, 68 delta, 162.50, 62 delta, 165, 60 delta, 167.50, 52 delta, right? 170 delta, see 43 delta, right? So as the stock keep moving, the delta keeps increasing with respect to gamma. Understand?
Mm-hmm.
Delta, gamma, two parameters. And the third one is theta. Theta is basically the tax you pay on this option. I would say time value, decay. You bought it for
Okay.
465 today, but it won't be 465 tomorrow.
Right.
Because it will reduce by 13 cents every day. If the stock doesn't move, it stays at 167.50. Every day you lose 13 cents of this value.
Okay, that's a premium for you. Okay. To
Understand?
hold it.
Right. And fourth is Vega. Vega is basically the implied volatility. Implied volatility will basically what they're saying is here at the money 167.50, right? In by call is 465, put is 435. So the net value is 865, $9. So it's called at the money price or straddle, at the money straddle. So basically option market makers are saying come May 17, this stock will move $9 below or $9 above. That's the range they're defining for this stock. Okay. So that range is, defined by this Vega actually. Basically, it's a one. I don't want to go in details, but let us say this implied volatility can really jack up the price. See what happens in terms of earnings. Let us say, let's take Apple. Right? You take Apple. Is Apple this week earnings? I don't know.
Yeah, I think this is.
Or let's take Nvidia. Nvidia will be crazy options, right? So basically, you can see at 172 this week, at 170, right? At 170, they are thinking $3.08, $3.60, so $7. And Vega is 8. I don't think this week. Let's go to 7 May 10th, and is 17th. I don't remember when these earnings are. $4, right? So probably Nvidia can give you better idea. Okay.
Nvidia is around May 25.
May 25, right? Like, as you can see, May 3rd, NVIDIA, but NVIDIA is still moving, guys. So it's a bad example. But NVIDIA this week, they're saying 22 plus 25, $47 move is what they're predicting, which is a 5% of the stock they're expecting to move this week, which is Vega of 42%. Okay. And if you go to 22nd, is it? So if you go
Yes, sir.
24, so
Yes,
875, they're saying 66 plus 55, almost $120 move. So they're saying the stock will move 15%. You know what I'm saying? Because of the earnings.
Yeah, earning
So
week.
this is defined by Vega, right? So coming back, if you go to Boeing, so these are the parameters which will influence the option pricing, right? So if you are here and I buy like profit loss open, I buy this here. As you can see, I have a delta of $50, 50 cents, right? This option costs me around $465. But for every, if Boeing goes $5, my option will go probably $150 profit or $200 profit. And every day I'm losing that out of $213 theta, right? Now today is at 428. We are here. Like I'm targeting 175, guys. Okay. I'm thinking it will go to 175. Or if it is only at 170 to 50, break even. Or it is at the entry price, 167.50. Okay. As you can see here on 28, this is May 17th. Let's go to, May 17th, right? Today, if I buy it today, if it goes to 175, I'll make 503, right? Now, if I buy today, but it takes 1 week, on May 3rd it goes, you see the profit went to 453 instead of 500. Profit reduced. That's because we are losing theta every day. Got it?
Yep.
And if it doesn't do anything and stays at the same price, you're losing $45, even though the stock price didn't move. So that's all theta eating it up. Now go next, another week. Now May 10th, come 10th. If it goes 175, after 2 weeks, it's only giving me $364 instead of 500. You see how profit going down and theta is taking profits every day. And even if it is the same price, it's at 162, you know. So this is the impact of the theta. Got it? Now go back and we are at 28, right? 29, let's say. This is where we are at right now. Now, currently, implied volatility is low for this. Let's say Boeing got a bad news and you bought this call. In next 1 hour, they got a bad news and volatility went up, hypothetically, 5%, Vega, right? Even though stock did not move, your option is now $85 more expensive for anyone to buy right now. You are making $85 profit straight away. So Vega is called implied volatility. And there are people who only trade Vega in options. They do it for a living, nothing else. So right before the earnings, always option premium is very high, right? Like let's say if I come to NVIDIA, NVIDIA, this is a different one. Let me go NVIDIA on May 24th, okay? And I buy $900 call, $55, hoping that this will go to 1,000, okay?
Yeah.
And my target is 1,000 and my stop loss is 850, right? And if it happens today, if I buy $5,500 option, and if it goes to 1,000, I make 7.5K. Or if it goes to 850, I lose 14, which is great. Or every day I will lose $90 theta, right? Now suddenly NVIDIA changes the earnings date. Instead of 24th, they move to 31st. Got it? What happens is now speculation will go down. The volatility will drop straight away because nobody expects that week it will move $100, $1,000. You know, they are expecting that big move because of earnings. If there are no earnings, There is no guarantee it will move, right? The volatility dropped 10%. Now what happened? Your stock showing $1,000 loss. The stock didn't even move a cent. But because the vol dropped, option value shrink to straight away $1,000 because the volatility went down. Vega went down. Got it?
So is it for the earning week, or if you have an option for say like May 20 means we have June 10
Yes.
options for
So
it?
now, yeah, I'll come to that. So you understand
Okay.
delta, gamma,
Yep.
theta, vega, all four parameters, right? How they, I mean, probably you may not really understand, but I'm just trying to give a very high level. How each and everything will affect the stock, right?
Yeah.
I lost most of money because of gamma. It bankrupted me, gamma. My account busted. The reason is I buy the same week options. Gamma is notorious for that week option. Gamma will explode significantly. So for every dollar, delta will become, in the money is very fast. There is no time value there. If you understand how there's a Scholz model, how the option price is calculated. We don't want to get into that. But the shorter the time, if you are an option buyer, the gamma is going to kill you. But the shorter the time, if you are selling option, theta is your profit. Because you are just expecting option to go worthless. You sell, I'll go and sell like this week, I'm going to go and see that, hey, NVIDIA is not going below 850, right? I'm selling $1,200 worth of put on this. I'll make $1,200, right? But come Thursday, if NVIDIA drops 10 or 15% like it dropped, I'll just get screwed by gamma. Okay? So the summary, I don't trade short-term options.
Okay.
Because it is too much of emotions. It's like good feel to buy tomorrow expiry and day after tomorrow expiry options where it can really give you profit. I do it. I never sell short-term options, period. But
Okay.
like, let's say I might buy option. Okay, I'm going to now $4.50. When I buy the option, I'm risking 100% premium. There is no stop loss for this. I'm keeping all 5 days. I let it go to zero. Because my goal is I wanted to see 1,000 this week, right? So if I'm prepared to lose 100% premium, then I'll buy this option. And this I can do only if there is a big event, like the stock is down. All stocks are down before FOMC. But I see that NVIDIA is really strong, not going down. If Fed comes positive, I know this Friday it's going to rock. So I'll buy, like out of the money, like deltas, like 20 delta option or 10 delta option, which can quickly become 100 delta because of the gamma explode. Gamma will explode in the last 2 days. So when we are saying delta 30, 40, basically what we are saying is the percentage of probability. If the delta is 30, means there is a 30% chance this option will be in the money. By May 3rd, if we are saying here, there is a 30% chance, 70% chance NVIDIA won't be 910. Got it? That's what the delta means, basically. Now, because of that, I will go long term, because my term, I'm waiting. I want to wait for a couple of years on the way. Okay. So if I'm taking a trade here, and if I have I want to invest $5,000 of my account, which will give me 30 shares, right? So I'll look for a 30 delta net delta option. Okay. So I can go to Jan 2026. Okay. And I buy probably $240 call. Okay. That means I will make profit only after 250, technically, right? But in next 6 months, if the stock moves to 230, that means it reaches that price, whichever price I bought 240. Okay. Right. This is 1,200, right? I'm buying 3 options here. But 3 options are giving 114 deltas. So I don't want to do that. Okay. So for $1,200, I can buy same 30 shares. Got it? Instead of 30 shares, which cost me $5,000, I'm just taking fraction of it, which is $1,200. And I bought almost, probably I'll go for 250 call. Let's go 250 call. Okay. I costed $1,000 and I have only deltas of 30 for almost. So basically what it's saying is your option move the same way as a 30 stocks. If you have a 30 stocks, so basically you buy a 30 shares at 130. Let's see, you bought 30 shares. You buy 30 shares. You see delta is 30, but this is shares, I'm just saying. So basically when it goes to 130, you have a loss of $1,100, right? When it goes to 240, you make $2,190. Okay, let me screenshot this and I will compare this. So this is a pure stock buying. If you have $5,000 and you buy stocks, and at 130 you're losing $1,100. At 240 you're making $2,000. And if stock drops below 130, you will lose more because it's a stock, right? Instead of that, I'll take that $1,100 and I just buy an option. So I'm giving it 2 years time, and it's giving me same 34 deltas, same 30 deltas. Are you following me? Is that confusing?
Following much.
Okay. But this time watch. The stock goes to 240. What my profit is? Twice the profit, right? Instead of 2,000, I make 4,000. And if stock goes to 130, what is the loss? Stock 1,100, but option is only 500. Got it?
Yep.
So what's the problem? I have no gamma problem for this because it's 2 years out. Okay. Do I have theta problem? Yes, I do theta problem because daily I loses $3. It has a Vega problem. It has no Vega problem because it's like 2 years from now, nobody is going to bet on that option right now. Nobody. Anybody who wants to bet on big news, big events, they will bet this week and next week, or maximum 3 to 4 weeks. Those are the options will be very expensive. Those are the options speculative. Those are the ones get impacted by IV. 2 years from now, I don't have IV problem. Right now, let's say I give I'll give you 90 days. What happens after 3 months? Or 4, right? Probably let's go to July. Right. Now you see, I'm losing 607. July option, it is it should not be profitable. Actually, something theta should go down actually. Right. I don't know why it's not showing. But basically what I'm saying is, let me see. Yeah. So probably this option prices should be 12, I think. That's when it makes difference. So you will slowly lose the theta value though. Okay? Because that you cannot stop, but it bleeds slow, but it gives you enough time, right? Come January 2025, you lose $500 in that option, even if stock doesn't move. That is the only downside for this. Got it? Buying long-term option, we got rid of gamma problem. We got rid of Vega problem. We are dealing with theta problem still, but the magnitude of theta problem is very small. Okay.
So how is the liquidity for the 2-year option?
Yeah, that's